everyone confuses inflation and debasement.
Yeah, exactly.
Inflation is CPI, which is the rise of goods and services. That is nothing to do with, and this whole monetary inflation, if they just stop conflating the two things into one, they said there's inflation, which is usually a cyclical phenomena, and then you've got an occasionally structural because of, let's say, population or whatever, and then you've got debasement, which is a whole different game, and that's been going on.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Real Vision founder and CEO Raoul discusses the upcoming U.S. election and the wave of new money waiting to enter the market if a breakout is confirmed.
What is an asset? An asset is future deferred consumption. It's something you buy today. You get rewarded for locking up your capital by excess returns for the future, and for that you can spend it in the future. Now, what's happening is our future selves are getting poorer because you can afford less. The investment banker, 25-year-old investment banker now can buy a fraction. Well, he can't even buy the house because you can't even get the mortgage on it anymore. So then you're missing out on that whole rung. And if you look at the stats of home ownership of 30-year-olds, it's collapsed if you compared it to 1983. All of the stats just show that they're just going to miss out on a big part of economic life, which is why so many people are driven towards speculative assets, because it's the only way of making it up. When you speak to somebody, I had this conversation today or yesterday, I'm like, why don't you invest in the S&P 500? They're like, how much does it make a year? 8%. And they're like, I'm fucked. I'm never going to make enough money to retire or do anything. So therefore, they move to Bitcoin. Now what's happening, it's really interesting. Go and speak to a 33-year-old now and say, so, I presume you're long Bitcoin for the crypto cycle. They're like, fuck that. 4x? Never going to make me enough money. I need to make 50x.
Yeah.
I'm not joking.
Yeah.
If you speak to the average millennial now, they're under pressure because they're getting married. Some are having kids at the lowest rate in all history, and they haven't got a house, so they're trying to get a house. And so it's pushing them, as they get towards their 40s, that it's pushing them to become more speculative, not less speculative. It's like, we need to move forwards with our life.
While still a far cry from the traditional rate of gains in October, Bitcoin gave market participants cause for optimism. Regardless where we go from here, I see new highs in this year or Q1 next year. Popular trader Crypto Tony told followers on X. Various voices called for a retest of $65,000 resistance on lower timeframes, this functioning as the key battleground within Bitcoin's ongoing consolidation zone. Employing Elliott wave theory, fellow trader CryptoEd, creator of trading platform CryptoTay, suggested that last week's dip below $59,000 was now written off. This most recent push higher, slightly above B, invalidates last week's scenario for a move to $57,000. He explained, it came close, but that move in C truncated and is completed, expecting a retest of $65,000 soon. The move that followed the weekly close liquidated around $100 million of cross-crypto short positions. The latest data from monitoring resource CoinGlass put the total liquidation tally at above $180 million at the time of writing. Amid a consolidation phase now lasting nearly 8 months, Bitcoin rebounding to test all-time highs is firmly a question of one step at a time. Examining the longer-term situation, popular trader and analyst Rect Capital emphasized the highest daily close price reached in August, around $64,300, as the next key hurdle for bulls to clear. That level, he noted, has been weakening as resistance ever since. In the past, the August highs prompted a 18% retrace. He wrote in a dedicated X post on October 14. whereas 2 weeks ago they prompted only an 8.5% pullback. Rect Capital added that there was now a good chance that price action would dispense with August resistance once and for all and continue toward the next zone of interest at $66,000. This currently marks the top end of a downward sloping channel in place since March. Bitcoin is now challenging the August highs again, and there's a good chance they'll break. A break beyond the August highs would enable a move to the top of the downtrend channel, red box. He commented alongside an illustrated chart.
And we've seen volatility come down, like Bollinger Bands have got to the kind of super low levels.
So that means we're coiling basically in price.
And every time it's got to these kind of levels, we've seen price explosion to the upside. And as volatility comes down, it just becomes super attractive in this kind of stuff. I trade a bit of options, not a lot, but I trade them on Deribit, obviously. But yeah, I mean, look, everything is in place. The only thing that we were talking about this earlier, Dave and I, was like, the concern is we all think it's likely to break to the upside and go fast. And the issue is where is the capital flow going to come from? So if we're stepping away and want to give ourselves a counter argument, is everybody's looking at each other to say, well, when it breaks, the market's going to go higher because it's going to bring in all of the FOMO. But it needs to break higher to bring in the FOMO.
That's right.
That reflexive thing needs to start. And every time it's got to the top of the range, it's come back down. And now whether that's because of some flow we don't know, FTX estate stuff or whatever it is that keeps slotting at the moment it gets to the top of the range. The other thing about meme coins that's just really interesting is Bitcoin now, there's such a heavy narrative. You go around it, you need to understand the history of money and, blah, 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 right? And meme coins is, I like the meme, number go up. Right? That's so much easier and much less inhibiting to a 25-year-old than...
It is, and I can understand why people get sucked into it, but also it's kind of like, isn't it a bit too easy? Like, as in, if you...
Oh, it's not. As Michael said, 99% of these
go to zero
immediately.
Yeah.
Right, and then there's a trend. So now you're just capturing an attention trend. And look, don't judge them with your kind of financial market, well, they're all going to get blown up. They know what they're doing, which is attention is fleeting.
Gambling, yeah.
And I'm going to gamble how long that attention goes on for and how valuable it becomes, knowing that it's not going to be persistent. Yeah, sure, Doge and Shiba Inu have been persistent, but that's it. So they know the game.
Sure.
They're internet native. They know the game, which is like, when does that meme become boring? Then you need to get out.
After last week's slew of U.S. macro data prints, jobless claims and earnings season now form the focus as election week draws nearer. Jobs data has helped create a particularly troubling situation for the Federal Reserve, which is now dealing with both rising unemployment and rising inflation gauges. We now have the Fed, election, geopolitical tensions, and earnings in the spotlight. Trading resource, the Kobayashi letter summarized in part of its recent X analysis. Around 10% of S&P 500 firms are due to report earnings this week. The latest estimates from CME Group's FedWatch tool underscore shifting market expectations for how the Fed will handle the upcoming review of interest rates on November 7. Coming just days after the U.S. presidential election, the event has transformed from one due to deliver another bumper 0.5% rate cut to potentially not reducing them at all. We are beginning to see some signs of inflation re-accelerating again, Kobayashi continued. Last week, core CPI inflation jumped for the first time since March 2023. The Fed is playing a dangerous game with 50 of its rate cuts. Despite this, U.S. equities moved higher last week, with both the S&P and Dow Jones hitting new all-time highs in gold trading within 1% of its own record peak. Bitcoin, in turn, rallied into the first Asia trading session after initially flagging, having dipped to $58,860, its lowest levels since mid-September. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.